Today, we're diving into a pretty bold and honestly a kind of unsettling idea: the possibility of an impending global market reset.
All right, let's just jump right in. Could the S&P 500 actually crash by more than 50% from its peak? I mean, think about that for a second. That is a massive drop. It's a pretty shocking question, right? And that's exactly what we're going to unpack today.
So, the analyst who came up with this forecast said, and I quote, "We're heading into one of the most dramatic shifts in financial history." Wow. After years of looking at the markets, they're not just saying this could happen, they're saying it's right around the corner. That definitely sets the stage, doesn't it?
Okay, so let's break this down. We're looking at a truly shocking market prediction here, a really bold thesis from one trader. And it's all based on their deep dive into both the technical charts and the fundamental numbers.
So what are we talking about exactly? Two big predictions. Number one, a huge crash for the S&P 500. And number two, and this is the one that might really catch you off guard, gold isn't going to be your safe haven. In fact, this analysis says it's going to fall. Let's start with that, because it really goes against the grain.
Right, the case for falling gold. I mean, is the ultimate safe haven really at risk? That's what we've always been told, right? When things go bad, buy gold. Well, this analysis completely challenges that idea. It suggests that gold's role as a protector might not work this time around.
Okay, so take a look at this chart. This is the technical analysis for gold versus the US dollar, and this is where that surprising prediction comes from. The lines here suggest gold could start a pretty steady slide, and then it could all kick off as early as March.
And they even put a number on it. The target? Around $2,500. That's a pretty significant drop from the highs we've seen recently. But why? Why would gold fall when things get shaky? Well, the theory points to three main things. First, a stronger US dollar. When the dollar goes up, gold usually goes down. Second, interest rates. The cycles are changing. And third, and this is interesting, a shift in where the money is. The idea is that investors might pull their cash out of things like gold and pile back into stocks, especially once the initial shock wears off.
And this is really the key thing to remember. Gold being a safe haven isn't some unbreakable law of finance. It's not guaranteed. Its performance is all tied up with monetary policy and just how investors are feeling. So yeah, it doesn't just automatically go up every single time there's a crisis.
Okay, so that's gold. Now let's get to the main event, the big one, the thesis that the S&P 500 is heading for a massive crash.
And here it is. This chart is really the heart of the whole argument. What you're looking at is a projection for S&P 500 E-mini futures, and it's mapping out a potential, well, a nosedive from the all-time highs we've been seeing.
And the numbers? They're honestly staggering. We are not talking about a little dip or a correction here. This forecast is calling for a crash of between 52 and 58%. Let that sink in. More than half.
But here's where it gets even more interesting. It's not just about the crash. There's a whole timeline laid out. So within 1 year, you get that 50% drop. Then, brace yourself for 2 really bad years after that, where we could even break the all-time low. But then, and this is the twist, it could be followed by 2 years of incredible growth, maybe even pushing the market to brand new highs. It's a real roller coaster scenario. So what's the trigger? What could actually kick this whole thing off? The analysis points to 4 big possibilities. The market being way overvalued for too long, corporate earnings suddenly taking a dive, the risk of a global recession boiling over, or, some kind of big geopolitical shock that nobody sees coming. Any one of those could be the domino that starts the fall.
Okay, so let's say it happens. The big crash. What then? What comes next? Well, the analysis doesn't just leave us there. It actually lays out 3 potential futures, 3 different ways this could all play out.
So picture this. You're a trader trying to figure out what to do. Scenario 1, a long, painful bear market that just keeps going down, breaking old lows. Ouch. Scenario 2, a crazy, powerful V-shaped recovery where everything just rockets back up. And then there's scenario 3. You're just stuck. The market goes nowhere, just sideways, with tons of volatility. 3 very different worlds.
And to really paint a picture of that strong recovery scenario, listen to this quote. The first year, they fall 30%. The second year, another 20%. Panic sets in. But then growth returns, and the market doubles in just 2 years. I mean, you can just feel the roller coaster in that description, right? Panic, then an incredible rebound. It's a great reminder that even after a huge crash, massive growth can follow.
Okay, so with a forecast this wild and volatile, what do you actually do? What's the practical advice here? Let's get into the trader's survival guide and look at what this analysis says you should be watching.
So there are 4 key things to keep your eyes on. First, what the Fed is doing with interest rates. That's huge. Second, inflation. Is it going up or down? Third, how are the big companies doing? Their earnings reports tell you a lot about the health of the economy. And finally, keep an eye on the US dollar index, the DXY. These are the clues that can help you see what might be coming next.
And what about your strategy? The advice here is pretty clear. Play defense. That means diversifying your investments, not putting all your eggs in one basket. It means maybe using options to protect yourself if things go south. And really importantly, it means having some cash on the side, ready to go. That way you can survive the storm and maybe even take advantage of some opportunities.
And this really gets to the heart of it. This quote says it all. Every crash also brings opportunity. I think that's such a crucial point. As scary as all this sounds, it's not just about losing money. A crash can also be a reset, creating incredible opportunities for people who are actually prepared for it.
And really, that's the final message. Look, whether this exact prediction happens or not isn't really the point. The point is that being prepared is everything. It's what will help you survive and maybe even thrive in the chaos, no matter what the market throws at you.
So there you have it. The prediction has been made, the analysis is out there, the scenarios are on the table. Now, will the markets actually follow the script? I guess we'll just have to wait and see.